Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is October 23rd, 2018. I thought I'd take a look at crude oil today with the ETF, in this case, is SCO. In looking at this particular page here with these deep dives, which is kind of traditional technical indicators, things of that nature, nothing's really popping up right now, given the fact that there was a huge sell-off in crude today. The trends are mixed. The technical indicators just haven't caught up. It hasn't had any type of a pivot. We're not in a support resistance level that is monitored by this particular tab here. But if we switch over to some of the deep dive pro alerts, we actually have a couple that have triggered here today. One is a dazed low, and another one is a T-rope. T-rope basically focuses on the 200-day moving average, which we'll take a look at here in a second. And the dazed is when the market has a huge move, so much so that it kind of leaves you your head kind of ringing in the fact that there's just been a lot of movement. And so sometimes when you have this type of a pop to the market, in this case this massive sell-off, there can be a little bit of a bounce to the market. So that's what this little reversal is referring to, and the fact that it's really had such a big move. Let's go ahead and just take a look at what the market itself did. Here's the downtrend that we're seeing in crude oil itself. We had the peak that basically started at the beginning of this month, and ever since then it's been selling off. We broke through the 50-day moving average, which is this yellow line, and kind of meandered around it for a little bit, and then today's action, it just kind of sold off, and surprisingly it came right down to the 200-day moving average. Now, I always look at the 200-day and the 50-day just as some type of a gauge as to where the market might actually go. But when you have big moves like this, you always want to look at the 200-day just to see where it potentially could be moving to. Now, here's the major support to the market right through here. And I think that we'll eventually get there, but I don't know if we're going to see it tomorrow. I think that there should be, with this dazed low that is triggered here, that there's probably a bit of a bounce that could occur here. I'm not sure how big the bounce will be, but I think that eventually this trend, should that bounce actually occur to the upside, that this trend will still continue on to the downside. So this level right through here is 63.82. That's my magic number for where the market is theoretically heading to. Now, we're oversold using the elastic level indicator with today's action, but it has just entered, and I typically will look at oversold and overbought territories. I'll note when it gets overbought or oversold, but I'm typically looking for pivots and exits from overbought and oversold territory. In fact, I'll be doing a webinar on a lot of different types of alerts, some of which relate to the elastic level. Not tomorrow, not this Wednesday tomorrow, but the following Wednesday, which will be Halloween. So I'll show you where you can sign up for that particular workshop. But as far as some of the alerts here, this again, daily bars for crude oil. The market had some nice topping type indicator alerts, and with today's action, we actually had two, as I mentioned. One is T-rope. Tightrope, that's what it refers to, and it relates to the 200-day moving average, as I talked about, and the dazed low. And so both of those are foreshadowing, just simply saying that the market has probably come a little too far too fast and is likely to have a little bit of a bounce. I'm not even sure if it'll be a tradable bounce if you're trading on an intraday basis, for sure, should that actually take place. But it's not saying that the market is going to sell off, or it's not going to continue its trend to the downside. So bear that in mind. If we come back to the site, another target that I always post every evening, and this is done about 10 o'clock Eastern Standard Time in the evening time. What we do is we'll take a look at the previous day's close. So this was today's information. In fact, I did an interview with TD America today, and I showed this particular chart where this was the close, and we had two targets on the day, 67.93 or 96, I should say. So basically 68, and the other one was 66.70, and we hit both of those targets. And in fact, we came back below, and actually we're a little bit further. But if ever you're looking for targets just for the day, this would be the page to come to. And the way you come to this particular page is if you come to signals and then daily support resistance levels, and then you'll get all of the different markets, and so you can toggle across the board on that side. So on a short-term basis, we had the day's low, we came down to the 200-day moving average, but longer term, what I want to show you is again another chart that I showed on the TD America interview that I did earlier today, which is the 5-day or 5-year, the 10, the 15, and the 20-year. I only showed the 5-year, but you can see that crude oil is in an accuracy zone, if you will, where the blue line represents the seasonal tendencies of the market, and the black line is the current year, and you can see that it's following suit fairly nicely. So what we would expect to have happen is that the market on a trending basis will continue to trend to the downside until, at least on the 5-year, until mid-December. If we look at the 10-year, which is currently not accurate, but it's still following suit, you can see that there's a more pronounced trend to the downside. 15-year, which is accurate, would be looking for a little bit of a bounce. That's kind of what I was referring to with the 200-day moving average. But this is what I'll have you focus on. Mid-November, there should be another nice opportunity on the short side, comparable, if you will, to what we've been seeing with some nice movement to the downside with crude over the last couple of trading days. So keep that in mind, that there's another opportunity that's kind of looming out there. As far as where the systems are right now, we're short crude oil, got a nice little open position profit. We're short heating oil, and we're long, in this case, natural gas. So this will give you an idea as to where we stand with the systems. We were able to take advantage of the nice move we had to the downside with crude oil, but I do believe that with that 200-day moving average, that there's that possibility that we could see a little bit of a bounce and a little bit of give back. But these systems, I think for the most part, are looking more longer, and I say longer term for us, longer term, where there's still a little more downside pressure. So we'll see how things actually play out here with the those alerts that I was showing on the deep dive, and see how accurate they are actually going to be. But I think that these in particular are kind of early warning signals, and not necessarily something that any pop to the market to the upside. I don't know as to whether or not our systems will liquidate because of that. So just watch and see how things kind of play out. As far as the webinars that are coming up, I mentioned that we're going to be doing one for Pro Alerts and be looking at some of those types of alerts and trying to explain what they represent so you can factor them into your trading plan. That will be coming up on Halloween the 31st. And then we have Grading the Markets kind of cut off here. But if you come to this particular page, you can sign up for any of the different types of workshops and webinars that we have coming up here. Typically, I try to do things on Wednesday morning at about 11 o'clock Eastern Standard Time. So there's still time to sign up for this one, the one that's going to be coming up tomorrow. So with that, let's see how crude oil actually reacts. Just simply watch the 200-day moving average, because you can find that information out quite readily. And we'll see how the systems react with any type of little bit of a bounce, and then see us run out the trends with the seasonals going into December time period. See how things kind of react on that side. But there's a lot of tradable opportunities in crude oil. So with that, I appreciate it. And if on my links here tonight, what I'll do is I'll put a link to the interview that I did with TD America earlier this morning, where I talked about some of these things in a little more depth. So with that, thanks very much for watching, and we will talk to you tomorrow. Bye-bye.